Good evening and welcome back to Be Rich. Today I want to talk about the state of the bond markets. Bond yields have spiked. Normally, most of us watch only what is happening in the US Treasury, that is the bond yield. The bond yields have jumped from 1.5 to 3.5 before cooling down to 3 yesterday. Basically, what has happened is the fear of inflation has gripped the bond market and they expect the Fed to increase interest rates. Inflation never seems to be under control and is continuously rising. At this point of time, as I speak to you, inflation has reached 8.6. Everybody expected inflation to peak at one level, that is at 8.5. They wanted it to dip further, but it has not happened. And therefore, Jerome Powell, under pressure, had to increase interest rates 0.75. Normally, here interest rate rise is only 0.25. This time, he has been forced to increase it three times. That is 0.25 into 3, 0.75. He has promised to do another 0.75 if the inflation does not decrease substantially. But it is a given that he is going to do zero point 0.5. He has already said that the end of the year, inflation is going to be at 3.8%. This means that rates have to double from where we are today. Today's Fed's lending rate is between 1.5 to 1.75. If that goes to 3.8, that means a full 2% increase by the time the year is over. Unlike India, America has a large bond market. How is this bond market being affected by huge corporate of bonds issued by huge corporates that are freely traded? Till 2020, these large companies could issue bonds for free, and so they collected huge amounts of money. Google borrowed through bonds a huge sum in 2020. The bond was issued by Google's parent Alphabet. This was basically used to finance other short term requirements. Now, those bonds are due for maturity in 2050. The coupon rate is extremely low. But now, what has happened is the prices of those bonds have collapsed because nobody wants to buy them. Because at that time, the Fed was lending at 0%, and anything more than 0% was extraordinarily good. But the length of the bond was 30. Today, the same bond is available for 65 cents. That is, a dollar's bond of Alphabet is now available at 65 cents and is expected to go down further and drop to 50 cents by the time the cycle is over. Imagine the bargain that you are able to buy a bond worth $1 for 50 cents. Now, this price movement of bonds it should not fool anybody unless you are a trader. A trader is a person who buys the bond at the most bottom of its existence and then sells it as it comes up. As interest rates go up to 4.5%, the price of Alphabet bonds and also Apple and any other large company which is issued will correct. It will correct so as to adjust the market to the current interest rates. The yield on Google bonds at 65 cents is just 4%. That is, at 65 cents to a dollar, you make 4% coupon. That is, the amount of interest that you are paid reflects only 4%. This is because Google raised money practically cheap. There is another bond issued by another company called Carvana, which is also a tech company and doing well. Those bonds are available at around about 80 cents to a dollar, but the yield has already climbed to 16%. So when you buy a discounted corporate bond in the US, you have to look at two things. What is the safety of the bond? I am very sure that Google will pay its money by 2050, but I get a return of only 4% on the capital invested. But a smart trader will know that these interest rate hikes cannot go on forever. So when the Fed tightens to its peak, you have bought a major bond chunk and you sit tight. And by the time the interest rates begin to go down, Alphabet's bonds will also begin to rise. In the future, say at any time before 2050, the price of the bond will come back to near maturity. When the bond comes back to maturity, you have already made the money. Here, this 35% does not look big because There is another good 25 years before you get the capital. If the duration of the bond was shorter and the same quality of bond was available 65 cents to a dollar with maturity within 3 years, then you are making nearly 20% return plus yield. The problem in alphabet stock is the length of duration of maturity. But the markets are smart. A 3-year bond will not be selling at 65 cents. But when the carnage comes to the market, as it has now come and will come in this year, one can, with a lot of money, wait and look at the bond market and pick out blue chip bonds at 30 to 40% discount and make a great return. I am reminded of a time when there was a Washington power utility based on nuclear reactors which had issued bonds, and the price of the bonds collapsed. And Warren Buffett went ahead and bought those bonds and made 18% yield on those bonds, and on maturity got the entire money. These bond markets have been in a bull run for the last 30 years. This is the first time in 30 years that the bond market has turned the other side, and it is ravaging the value of the bond. This is expected to continue till interest rates stabilize, and interest rates will stabilize only when inflation is linked. Inflation is linked at this point of time. It looks very difficult that inflation will come down anytime soon. Therefore, one can, if you have access to US markets, you might, if you're lucky, get a high quality bond for worth few dollars at a rate which even today you will not find junk bond rates. These are the vagaries of the market which gives us opportunities to indulge in such activities. Thank you for watching. Be rich. If you like this content, kindly subscribe to my channel and turn on the bell notification. If you do not turn on the bell notification, you will not be notified every time we do a video. Once again, I thank you for your support to Be Rich. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.